Folks, the stock market crash just leveled down. It is getting worse out there. We got a lot to discuss in today's video. I'm sure you guys have seen it. NASDAQ down about 2%. Russell's been down about 2%, sometimes worse than 2%. Obviously, Ethereum, Bitcoin down big today. A lot of big downward moves out there. And so I want to discuss all this, what I'm kind of looking at, what I see transpiring here and those sorts of things. Hope you guys enjoy this. As always, make sure to subscribe to the channel. So first off, in regards to some folks feel like the market crash hasn't been getting worse, and I think that's because if you look at especially a lot of the stocks I'm in, or maybe some other folks are in, some of the small cap plays, right? A lot of these stocks are basically up 10-20% from their lows they reached back in January, around January 23rd, 24th. A lot of these stocks have climbed back 10 to 20% since then. They've come back pretty nicely, right? But remember, that's a very small segment of the market, right? The fact is, what I've seen consistently out there in the market recently is things are getting far worse for all the other companies in the stock market. And remember, folks like myself, with a lot of these small cap stocks I've been buying, we got hit the first, right? We got hit before everybody else. Everybody else was still partying, and then we were just getting smacked left and right. We were getting used and abused, right? And everybody's still at the party having fun. And that was us. And now we're in this situation where, yeah, sure, we're off lows of 10, 20%, right? But all these other stocks I'm watching in the market right now are getting far worse. And some of these companies are reporting great earnings. And how do they get rewarded? With their stock going down 10, 20, 30%. Some of these stocks are to multi-year lows now. Not just 52-week lows, but actually to multi-year lows now at this point in time. It's been incredible. If I go ahead and pull up my watch list here today, if I just track some of the worst performing stocks, Palantir is the first worst performing stock on my entire watch list here today. So Palantir reported earnings. They must, when you see a 13% downward move, you're like, okay, they must have reported bad earnings. It must have, been a bunch of misses and a disastrous quarter, especially when it's a stock that's already been beaten down. Let's be honest, Palantir stock has been beaten down heavily recently. It's not like that's some high-flying stock, right? Well, let's go ahead. Let's look at the facts around this, all right? Palantir reported their results. Total revenue grew 34% year over year to $433 million. Commercial revenue grew 47% year over year. U.S. commercial revenue grew 132% year over year. Government revenue grew 26% year over year. Added 34 net new customers in Q4 2021. Loss from operations was $59 million, representing a margin of basically down 14%. That was up 3,500 basis points year over year and 900 basis points sequentially. Adjusted income from operations was $124 million, representing a margin of 29%. Also, the company did reiterate, Alex Karp basically, probably almost a year ago now, said that the company is expecting to grow 30% per year for several years to go in the future. The company reiterated that on this earnings call. So that's all good news. I mean, the earnings, it looked pretty darn good, especially for a stock that's been, pretty beaten down like Palantir has. Those earnings, I couldn't find anything. I'll have to listen to the earnings call still. Unless there's something magical in the earnings call, it's hard to say why the stock should be down 13% today. But nonetheless, it is down 13% today, and that's the sort of market we're in right now, right? Let's go ahead and talk about Shop. You want to talk about the Chop Shop? Yeah, Shop got taken to the Chop Shop, okay? Shopify, $674 here today. I spoke about this one yesterday, and I was like, yeah, it looks interesting, but, when you look at what's happened to Meta, PayPal, a lot of those stocks that are large caps, super large caps, right? Those ones still haven't found a bottom, and Shopify, who's to say this one's going to find a bottom anytime soon, right? When you look at this stock, $674 here today, right? November 18th, the stock was $1,690. $1,690, okay? And so that's why I said, I know a lot of us, you were already getting slapped in this market at that point in time. Meanwhile, the party was still going on for other folks in the market that were in mega caps and large caps. And those stocks have just started to fall dramatically. I mean, this is extraordinary. This is nothing short of extraordinary. So $1,700 roughly the stock was on November 18th, right? Here today it's $674. That's over a 50% fall. Well over a 50% fall in a matter of, that's way over a 50% fall in a matter of 3 months. Crazy. I mean, that's just crazy. For Shopify, I mean, this is a mega cap stock. By the way, our market cap is lagging on. It's actually way below what this is right now. We're lagging a little bit there. And when it comes to Shopify, if you looked at their numbers, it wasn't like their numbers were bad. You know, their numbers are actually pretty darn good. Yeah, their guidance wasn't quite as I guess you can say, as robust as people really wanted it to be. But still, it wasn't like that was a disastrous earnings, and it's like, yeah, send that stock down 50, 60, 70%. But that's what's going on with Shopify here today. And where's the big question is in this sort of market, where's the bottom for Shopify? And that's a question I have no clue. I don't know where the bottom could be for Shopify. I mean, in this sort of market, there's no telling. It could be 500, it could be 400, it could be 300. It's not like there's any sort of value that you could get Shopify to and be like, oh, it can't drop any more than here. There's nothing in this sort of market. It's just complete, we're kind of gone just completely irrational. When you look what's happened to PayPal, which PayPal is a profit machine compared to Shopify. When you look at what's happened to Meta, which Meta is a cash flow and profit machine. When you look at what's happened to companies like that and how far those stocks have fallen, who's to say Shopify can't fall another 20% from here, another 30% from here? And that's a tough thing in this sort of market. And that's why I think a lot of the buyers are very timid with coming in right now, because they're looking at some of these stock prices move down. They're like, man, why do I have to come in and buy Shopify right now? It's probably going to be 500 next week. It's probably going to be 400 the week after. And so that's just the sort of market we're getting in right now. And you could also say on that same side, you could say, well, people are maybe getting greedy around pricing. That's definitely an argument to be made. And at the end of the day, if you think Shopify is going to 3,000 or 4,000 or 5,000 over the next, 5-10 years, shoot, does it really matter if you buy it at 600, 500, 400? No. At the end of the day, that's a smoking deal, right? If you think it's going to those prices over the coming years. So, but in this sort of market, in the short term, there's no telling where these stocks could go. Shopify even today is still trading at a very high price to sales ratio, a very high forward PE. So, that's just a tough thing. Shopify's got a beautiful business model for the long term, but the market doesn't care about your long-term business model right now. All it cares about is sending your stock down. And it really doesn't matter what the earnings are. They'll look for any reason, any number missed, any little shakiness in the conference call. If they get anything in this market, I mean anything, they will send your stock down like it's nobody's business. And that's exactly what's going on with Shop here today. I'm going to listen to the Shopify earnings call. I haven't gotten a chance to listen to that yet. I really want to listen to that earnings call. I've looked at over all the numbers, but I really want to hear that earnings call because, I mean, Shopify, if this baby keeps dropping, I mean, at some point I've got to step in here. You know what I mean? And buy some of this one because, I mean, yeah, Shopify hits a 400, 500 level. You got to remember, this shop prior to Rona was a $500-something stock. Prior to Rona, okay? So, I mean, we're looking at this stock, potentially approaching those prices, and you think about how much progress has happened in the business, how much more relevant the company is today than it was 2 years ago. It's like night and day. And for this stock to, be in this sort of situation, at some point I'm going to have to step in. So I'm going to listen to that earnings call. I'm going to see what's going on there. You want to talk about another stock that's just been absolutely devastated, and you can make an argument that this one doesn't deserve to be devastated at all. It's Voyager Digital, okay? This company reported earnings a few days ago. 4,400% like revenue growth year over year, somewhere around there roughly. That was ridiculous, okay? Company is a growth beast. And then you go back to the stock price, a year ago or a little less than a year ago, it was $27. I mean, based upon that stock chart, you would think revenue, like if you just showed me that stock chart and you said, okay, Jeremy, what's going on with this stock? I'd say, well, high probability the company is maybe going out of business, or they're in a situation where revenue's tanking through the floor right now. That would, if I saw a stock go from $27 to $7 in 11 or 12 months, that's what I would say, 100%. But that's not the story at Voyager. Actually, revenue growth has been insane. They actually even made a profit last quarter, which is ridiculous because I can tell you there's not many companies I ever see growing at this sort of rate that are profitable. But their Voyager is just continuing to be on this vicious downtrend, and there's talk that Biden's going to, have something to say, some sort of executive order around crypto. I don't know what exactly is going on as far as that goes. We'll hear what happens with that. But when it comes to something like Voyager Digital, I mean, look at the 52-week high for the stock. It's almost 38. And, I don't know. There's another one of those stocks. It's like, where's the bottom? I mean, it should have bottomed. It should have bottomed a long time ago. It should have probably bottomed at 15. But here it is at 7 today, and who knows what happens with that executive order or whatever's going on as far as that goes that I'm hearing rumors about now. Where's the bottom at for the stock? The stock market's not looking for it to buy anything right now. Never mind a Voyager Digital. I think it's a pretty good, interesting long-term opportunity, but in this sort of market, it doesn't care. I mean, if they're not going to buy PayPal right now, if literally, think about it this way, right? If the market's not buying PayPal right now, how the heck is the market going to buy Voyager Digital? Voyager Digital is not even on a major U.S. exchange. And Voyager Digital is like, hardly even known compared to PayPal. And so although this company just put up a 4,400% roughly revenue growth year over year, this market doesn't care. This market looks at it and they're like, we're not even buying PayPal right now. PayPal's down like 60% from 52-week high. Why should we buy Voyager? That's the sort of market we're in right now, where the big funds and big money, they're just like, they're just passing on everything. By the way, there it is, PayPal. So, we go back 6 months ago or so, this stock, PayPal, is $308. This is one of the best companies in the world, like literally one of the best companies in the world. Probably, I would call it a top 50 company for sure in the world. In terms of respect, in terms of, revenue growth, in terms of like everything they just having it, right? They have it. They really have it. PayPal really has it. And no one wants to buy this stock right now. It still can't find a bottom. It's ridiculous. I mean, we're talking about one of the top 50 greatest companies in the world. And this stock cannot find a bottom right now. And so when you're in this market, it's just like, it just like fries your brain, because you're just like where's the bottom at for these stocks? They can't find a bottom anywhere. And it's just, I mean, it fell off a cliff and then it fell off a second cliff, essentially. That's what's happened with PayPal. I mean, this was the first cliff it fell down. That was vicious, right? And then it just fell off a second cliff here. And it's like, where does the bottom? And the thing is, PayPal's trading at, an extremely cheap forward P compared to how they usually trade at. It's trading at an extremely cheap price to sales ratio now compared to where it usually trades at. Every metric for this company. And believe me, their guidance over the next year is pretty darn strong. But in this sort of market, no one cares. No one cares that they own two of the most popular financial related apps in the entire world, in PayPal and Venmo. That doesn't matter in this sort of market. Nothing matters in this sort of market. It doesn't matter what PayPal's doing 3 years from now, 5 years from now. It doesn't even matter what PayPal's doing over the next year. All that this market cares about right now, and it's completely freaking irrational, is sell. Sell by any means necessary. We don't care anything about the next 12 months, the next 24 months, the next 36 months, the next 48 months, the next 60 months, the next 72 months. None of that matters in this sort of market. It's just complete free fall right now. And it's already gotten silly. Let's just put it like that. We're in a silly flipping flapjacking market now at this point in time. Look at Purple. This is an interesting small cap. Purple, I mean, this stock a year ago was $38. $38. This isn't even like some type of high-flying tech name or something like that. This company sells mattresses, bedding products, those sorts of things. And it's $6 here today, and it used to be $38. And, these sorts of stocks just can't find a bottom anywhere, like literally anywhere. They try to find a bottom and then they just drop more. And they try to find a bottom, and that's what frustrates a lot of buyers out there in the market is you buy the dip, right? And so you buy the dip. Let's say, you buy Purple, for instance, right? You buy it at $7. You buy it at $8. You buy it at $10. No matter what, it's off massively from 52-week highs. You're looking at this company, you're like, this is a great deal based upon their future, profitability, their future net income over the coming years. You're looking at all that and you're like, this is awesome, man. And then what happens in this situation? Well, it just drops more and more and more and more. And you're like, let's say you bought it at 10. Your stock was almost 40. You buy it at 10. It looks like you're getting a great value based upon the future net income, based upon how far it is off 52-week high, all those sorts of things, right? So you buy it at 10. Now it's at 6. You just lost 40%. You're down 40% from that initial buy when it looked like a deal steal at 10. And that's the sort of market we're in right now. I can tell you guys, this is not a normal market. It doesn't usually work like that. You don't usually buy a stock that's down 67, 70%, and then it drops another, 40% since you bought it, essentially. That doesn't usually happen, okay? We're in a very freakish market right now, and where's the end in sight? For a company like Purple, where's the end? Is it 5? Is it today at 6? Is it 4? Is it 3, 2, 1, 0? You know what I mean? Like that. It's just, you're getting completely to irrational levels, and that's just the way this market is right now. It's absolutely insane. It's and look at the NASDAQ, for instance, right? NASDAQ 3 months ago today, the NASDAQ's 16,000 plus, right? And this is when the party was still going on. It's 13.8 today. That's a big drop. Let's acknowledge that first. That's a big drop from 16 to 13.8. That was a pretty darn big drop. But that's not even the worst part of this, okay? The worst part of this is the fact that Apple, Microsoft, and a few of the other biggest have held this market up. The truth is, this could be so much worse than that. I mean, if it wasn't for Apple reporting the most insane numbers and Microsoft reporting some ridiculous numbers and a few of the other big techs, I mean, Intuit, Adobe, some of those still holding together the market, some of those massive market cap companies. I'm going to be honest with you guys. If it wasn't for that, the NASDAQ today would be at 11,000, 12,000 today. But because those big dogs held it together, the NASDAQ gets to be in the 13,000-ish range today instead of the 11,000, 12,000 range. So, yeah, I think it's so much worse than, I think it's, once you go beneath the surface, it's so much worse than the way it looks. And it feels, honestly, it feels like we're going through tech bubble 2.0. And I spoke about this yesterday. The main difference is, and I want another big point I want to make here. The big difference is with these companies, these are actually legit great companies with great business models. Like PayPal isn't some this is some pie in the sky type idea, and who knows if that's going to work. The tech bubble was built around companies that had not just insane valuations, but like these pie in the sky business models. And I was like, I don't know if that's going to ever work, but let's buy the stock. In this sort of market we're in right now, these companies have legit business models. Like, they're putting up insane revenue growth. They're putting up profitability. And if they're not putting up profitability, they're getting closer and closer to be there. They're well-financed. They're in a very, very good capital position. There's like a need for their business models out there. And yet we're seeing just, valuations, just get destroyed. 50, 60, 70, 80%, 90%. Some of these stocks have fallen from 52-week highs. I mean, when you're in that sort of market, you're in basically a crash market. And like I said, if it wasn't for the fact that a few of the biggest big dogs out there held this market together, I'm telling you guys, this NASDAQ would look way worse than it looks today. And I mean way worse. And so, it gets to look on the vanity side, it gets to look a little better than it really is. But you and I, everybody that tracks this market on a high level, we all know it's way worse out there than what the market's showing. Let's just put it that dang way, okay? Look at NVDA today. I think this is like the poster child of how rough this market is right now, right? So NVIDIA, 52-week high of 346 in the stock. It's down $100 a share. Down 7% today. Those NVIDIA earnings were amazing. And I mean absolutely amazing. Outside of Apple, I can't really think of a mega cap that reported better earnings. I mean, the numbers were, I looked over every single line item. It was like great. I mean, it was amazing earnings. Usually, if you have amazing earnings, like NVIDIA just reported, you'd be up 7% today. You'd be up 10%, 12%, 15%. NVIDIA reports amazing numbers and goes down 7+% today, right? And we're not even at the market close. Who knows? Could go down more by the time the market closes here today. And that just is, I feel like the poster child of this market right now, where it doesn't matter. It doesn't matter if you report great numbers. We're sending you down. If we can't, this is how the market thinks right now. If you still report great numbers, we will find a reason to send you down. And if we can't find a reason, we're still sending you down. We don't care. That's the sort of market right now, and that's the way big money thinks right now. And big money's dictating this. If big money wants to, that's the thing. If the earnings are great and big money wants to sell today, big money's selling today. That's just the way it is, right? And so, there's really nothing, you can do about it in the end, okay? Now, I'm going to give you guys the same message I gave the everybody in the private stock group, an hour ago or so. I said, in a market like this, it's best to have no exciting short-term expectations. Don't hope that the market stops dropping on a specific day, week, month. By setting an expectation like that, you are just setting yourself up to be let down. You have to just let it play out. In this sort of market, I do two things. One, acquire more and more ownership of companies I love for the next 5 years. Every little bit counts. Number two, keep an eye on the actual fundamentals going on with the business. Is the master plan still on track? The rest is just conversation. And that's all it is in the end. You got to just keep your eye on the prize in the sort of market and don't have expectations. You're just setting yourself up to be let down if you think, oh, we're at the bottom now. Oh, we bottomed on the market. Oh, it's going to bottom next week. You're just setting yourself to be let down in this sort of market. Don't even put expectations out there. Whenever that happens, it happens. And, whenever we actually hit a real bottom, cool, we can go up from there, but don't set an expectation that something's going to happen, or you'll just end up getting frustrated with the market. And the more you get mad and frustrated with the market, the more likely you are to make bad long-term decisions for you and potentially sell great companies that are down 50, 60, 70, 80, 90% that you believe in a ton for the next few years, but you just get so frustrated in this sort of market that you're like, screw it, man, I'm just selling. And you're just looking for the pain to end, essentially. And, what we know consistently in the market over time is in downtrending markets, in markets where investors are getting tore up, those exact markets you should either be holding or ultimately you should be buying. And that goes for every single one of these markets throughout history. Every single one. We know that the ones that get screwed are the ones that sell when stocks are down massively, right? And we know the ones that make loads of money are the ones that buy stocks when you're going through one of these sorts of markets and stocks are getting torn up left and right. And that's exactly what we're seeing right now in the market. So yeah, hope you guys enjoyed this video. As always, if you're looking to get some free stocks from Moomoo, the professional trading platform, check out pinned comment down there. They got a deal right now. Get up to 5 free stocks. Right now, $100 deposit, get a free TTCF share. It's pretty amazing. So definitely check out pinned comment down there. Set up an account with them. They're pretty awesome. And also, if you're looking to join our daily newsletter for Hungry Bowl and put in your email, that'll be pinned comment down there as well. Much love as always. Keep your head out there and have a great day.